Indeed, they are not. In fact, if anything, we are regressing. And if you look at it, for us, one of the key indicators you have to look at is gross capital formation, right? Which gross fixed capital formation in particular, which deals with at the level of investment, the investment that is advanced to through machinery to create employment and all of that, and that has declined in actual fact if you study that report carefully. But secondly, is the question of the industry that has registered the greatest growth is finance and real estate. I think it has registered 1.2%. And that industry, if you study it carefully, you realize that it does not even employ a greater majority of the workforce. It is the least employing sector of the economy. And therefore, if it is the one that has registered the greatest growth, then we will not even begin to make a dent on unemployment statistics in this country. Yeah,
certainly. I mean, in the first quarter, I'm just trying to look for the line now, but essentially, I think 6 out of the 10 various sectors actually contracted. The picture is very different for the second quarter. 7 out of 7 industries actually recorded gains. You know, so quarter on quarter, the improvement is there. I'm trying to look for an upside to the story.
Yeah. Well, we may try to do that, but you see, the point is that they are gaining from what perspective, right? Most of them in the first quarter, in fact, had declined. And therefore, looked at overall, you must remember that in the first quarter of the economy, of the stats, in the first quarter, the economy had grew by 0. It had not grown at all.
Right.
In other words, most of those industries that have registered so-called growth in this second quarter had in fact declined at the time. So looked at overall, in fact, these are not even growth stats that ought to be, as I've said, celebrated at all.
So yeah, overall economic growth is subdued, at least for the first half of 2024. With the load shedding issue now seemingly a lot more under control than it was 6 months ago even, the hope, of course, is that the second half of the year will take on a whole new picture.
Well, we doubt that. We doubt that because there are 3 key areas that give us sleepless nights. The first one is the monetary and fiscal regime. In fact, the monetary regime itself, in that the South African Reserve Bank continues to keep the interest rates high and thereby throttling industries and businesses, and also throttling the working class and the middle class, making it difficult for them to meet their debt obligations. In fact, in our view, is what explains the growth of the financial sector, in that wealth then is redistributed from the working class and the middle class to the financial sector. And that is why you see it being the one that has contributed the greatest to this so-called growth that we see now. So we are saying, one, it is the problem of the monetary policy, but second is the question of the fiscal policy that stance that the South African Treasury in particular has taken. And it's a fiscal stance that is in pursuit of what they call budget surpluses. In other words, we have a problem of an economy that is not growing, but in the midst of that, we have a state that is refusing to spend into the economy, further contributing to the spiral of an economy that refuses to grow. You have that particular problem. And then, of course, we have South Africa's problem, amongst other things, is the low-wage colonial structure of the South African labor market, in which then you have a problem of the overwhelming majority not having sufficient purchasing power in their pockets to be able to purchase and to be able, therefore, to enable consumption to go, even though we saw that there's a bit of a consumption growth in the household final consumption, but that comes from a first quarter in which they declined. So it's not really a growth. So in our view, those 3 key pillars: 1, monetary policy; 2, fiscal policy, but also the industrial policy that this government has taken is such that there's nothing to be hopeful for.
Yeah. You know, we talk about challenges of unemployment. We know that our unemployment rate has steadily been on the increase. We talk about issues of hunger. The numbers that we have tells us that 27% of children under 5 are stunted due to chronic malnutrition. 20 million South Africans are severely food insecure. So when we talk about all of these big policy issues, budgetary constraints, this is what it comes down to, Newton. It's about the standard of living for the majority of South Africans reflected in numbers like hunger, unemployment, and so on.
Yes, but these are bad policy choices in our view, that indeed they are structural and objective conditions that are inherent to capitalism as a mode of production. Indeed, that is true. But also we are contesting, we contend that some of the overwhelming problems that you have just referred to are as a result of the policy choices that the government has taken thus far. And I have already indicated that the monetary policy that is restrictive, you have a fiscal policy that is hell-bent on budget surpluses, and of course you have an industrial regime that is very, very, very problematic. So our contention is that if the state were to, in fact, increase the budget that is spent into the economy, and if the central bank were to reduce the high interest rate, you could see an amelioration of the conditions that we have earlier referred to.
Yeah. The government of national unity has now been in place for some months, and we know when it comes to these kinds of markers, insofar as the economy is concerned, sentiment is a big part of that. How do you think the government of national unity has affected that issue, the issue of sentiment, and depending on how things turn out for the coming months, years, it's certainly going to have a huge impact as well in the future?
Well, before I come to the question of sentiment, and I presume you are referring to market sentiment, but before I come to that, it's whether or not on the three key pillars I've referred to, there's any attempt to shift from what has been the problem throughout. And our contention is that there has never been any attempt to shift from that. In fact, all the parties party to the GNU, their only contention is that the problem has been lack of implementation. So they are not saying the instruments themselves, the monetary and fiscal instruments are problematic. They are saying the problem has been the question of implementation. So if that is their premise, then it means, and if we happen to be correct, as we think we are, then it follows that there's nothing that they are going to resolve as far as we are concerned. The interest rate will continue to be high, and therefore will continue to throttle both the working class and the middle classes and small and medium businesses, but also the state, and it has indeed insisted on this question, that it is pursuing budget surpluses in an economy that is struggling to grow. So our view is that we are not optimistic at all, because despite their proclamations and their declarations, they are still hell-bent on the instruments that have led us to where we are today. That's point number one. But point number two, well, as a trade union worth, it's solved. We take serious issue with the question, or rather with the view that the whole of society must be at the mercy of the sentiments of capital owners. Mm-hmm. In other words, all of us must bow down to the interest of a small, tiny elite that owns capital. And we are saying it is precisely for that reason that everything ought to be done in accordance and in accordance with the whims of capital owners, that we have serious problems. In that, one, you try to keep interest rates high to be able to please the financiers and to be able to please those who own capital in the money form, in the forex market. You try to do that at the expense of the economy itself. But secondly, precisely because of their conception of how the economy works, they try by all means to pursue budget surpluses in an attempt to give these so-called investors confidence so that they can invest. But this has been in existence for quite some time, and investment has not improved in this country. Therefore, even if you accept their logic, their thing is not working, because the purchasing managers index shows that capital has not been investing. But secondly, is the fact that despite all of that, the economy has been experiencing sluggish growth. So our view is that this pursuit of market sentiment, even if you accept their logic, does not work, because the state has tried to pursue market sentiment and to appease capital, and it has not worked thus far.
There's the issue of policy decisions, budgetary constraints, pursuing budget surpluses, as you've contended, Newton. But the money is there, right? Time after time, the Auditor General tells us that grants are being returned to Treasury because they haven't been used for their intended use, whether it's to fix infrastructure or whatever the case might be.
Well, partly correct, but partly would contend otherwise. Our contention is that, in health, in education, in other departments, the real, allocation of budgets in real terms has been declining for quite some time. That's point number one. But point number two, of course, we may agree that even with that slight budget, even with the budget that has been allocated, it has been mismanaged, and as a result, some of it had to be returned to the treasury. But we are saying even if it were to be managed properly, it would not be sufficient, because the treasury itself has been embarking on the budget surpluses. So our contention is that besides the question that this thing is being mismanaged and therefore sometimes it is returned, it does not suffice to be able to lower, for instance, diminish teacher to learner ratio, nurse to patient ratio, doctor to patient ratio, and so on and so forth, which indeed have been shown to be appalling and therefore vindicating our position that the Treasury has been hell-bent on not filling up, on financing these departments to be able to fill up posts and to be able to lower those ratios to which I have referred.
Newton Masuku, let me thank you for your time.